Good afternoon, everyone. Actually, I should say good morning. It is Sunday, the 13th of September, 2020. It is a beautiful day in London. And definitely as we head into fall, or in towards autumn. But what I'm going to do is have a look at currencies for this week, starting with the dollar index. Before I get into that, I want to have a look at the calendar. So I'm going to be focusing on high impact news events and just looking at it. There's not much happening on Monday or Tuesday. Then moving on to, say, Wednesday, yes, certainly I'm interested to hear what comes out of the FOMC statement as well as economic projections, just taking into account all of the general economic instability. So I'm interested to see what perhaps comes out of that. If I am looking at any of the other pairs, possibly unemployment or employment rates, not really as much as significant with other currencies at the moment as it is with the US dollar, and then potentially with sterling on Thursday. Monetary policy as well, similar, the official bank rate, how that could potentially impact sterling in the UK. And so really that's it for me. So most of the focus will be around about 7:30 p.m. in the middle of the week around Wednesday. Otherwise, there's not too much that I would anticipate in terms of scheduled news that could disrupt the markets. Having a look at the dollar index, in principle, I've got a daily on the left-hand side, weekly top right, and monthly bottom right. Having a look at it, so it is still largely within a range on the monthly time frame. Within a weekly, on the weekly chart, it's actually within a downtrend, producing lower highs, lower lows, and currently retracing back up towards the moving averages. So what I've done is highlighted this blue area here, which represents to me a feasible area between the 382 and the 50% retracement. As well as heading back up towards 95 or even 94 to test that for resistance. So this is something I've been waiting for a while. It looks as though we've officially now broken this downtrend. So lower highs, lower lows, we've now broken that high. This is now no longer in a downtrend, which confirms that it is a weekly retracement. And so expecting price to head up, I think at a minimum towards 94. Looking here as well, although we had fresh lows in price action, we've been steadily getting higher highs on the indicators. So both of the indicators showing bullish divergence there. Price finally following through, and all of this at a minimum looking for a retracement towards 94 this week. So I've spoken about it, but here's really the confirmation of it breaking the previous highs, killing that downtrend, and now looking to do that retracement. So also based off price having broken through recent resistance and producing a nice little bullish candle here, makes most sense for me to see price this week continue to see that dollar strengthen. In the shorter term, heads up towards 94, potentially up to 95. And so that should then be reflected, and this is my expectation, see it reflected on the euro dollar. Interestingly, though, the euro dollar is not actually as weak as the US dollar. It's actually still quite strong. Looks as though it wants to pretty much tread water until it connects with those moving averages. So I'm expecting or anticipating, unless that dollar really pushes through and moves all the markets against it, I'm expecting the euro at least to maintain and potentially move down towards 1.17. Okay, it has effectively broken through 1.15 and therefore the next kind of significant monthly levels up towards 1.23. But any kind of retracements on the weekly would, if nothing else, just kind of allow it to prepare for another move higher. Moving on. Having a look at sterling against the US dollar. So of course we've had a much bigger move here. We've had a solid weekly retracement back down to previous levels of resistance, down towards 1.25, 1.27, and it is still largely range bound, so that taking that knock off the top of the range, for now it's certainly reasonable to expect price to head back towards the middle of the range if nothing else. And so certainly I can see sterling heading a little bit lower, down towards 1.27 and perhaps even down towards 1.26. throughout the rest of the week. That does support the idea of a stronger US dollar. Then having a look at the Australian dollar against the US dollar. Similar to the euro, it's been relatively strong lately, and a smaller retracement down to, let's call it 0.715, I think at a minimum. It is overextended in terms of the monthly, just in terms of a nice little pullback. I'd really like to see this head back down towards 0.7, but in the shorter term, in the medium term, sorry, I beg your pardon, looking to see that Australian dollar weaken. It's, you know, again, comparing it to sterling, sterling has been very weak. The euro and the Australian dollar look as though they're holding for now. But so what this means is that on a practical basis, daily, my expectation is leaning towards the downside and increased volatility. So sort of sideways and slightly bearish, which means I'll be staying away from it in terms of intraday trading. Looking at the Kiwi dollar, similarly here, there's some solid kind of bearish divergence here, and also bumping our heads up against resistance, which is also previous support. So this is a really good area for this to potentially do a swing high on that monthly. And so there again are potential, there's leanings here, signs that a stronger dollar could show rear its head this week. even if it's only for the shorter term. Looking at dollar yen, no surprise here, really just kind of sideways, no clear trend on the daily. General volatility, which is typical of it within its longer term range, but it is, as I said, creeping down towards that 105, 104.50 level as well. At some point, it is not, I don't think, unreasonable to expect this to break and start to head lower. Here on the weekly, you can just see for at least the last 6 or 7 candles just going sideways. So that means intraday trading is highly volatile. For me, this is higher risk, and I'm definitely going to be staying away from it. But overall, I do expect to see this to continue to slide slowly but surely to the downside. Then moving on to dollar Swissy. This starting to head lower, and there's no doubt in my mind that generally the trend is to the downside, barring any kind of shorter term retracements. So here to see dollar Swissy, to see that retrace back up towards that 0.94 level makes a lot of sense as well. Back into the moving averages before resuming the longer term downtrend. Certainly I think that the S&P is going to they're going to enjoy seeing that. They'd really prefer to kind of see a little bit of reprieve on that. And so again, they've, similar to that US dollar or the dollar index, they've broken that downtrend. And so I'll be looking for shorter term moves to the upside. The problem here is that generally speaking, the trend of this is generally to the downside. So with the dollar index, although I expect it to continue to strengthen, in this particular case, we also have the Swissy kind of strengthening as well as the US dollar, and therefore it kind of going sideways or slipping a little bit makes sense to me. What that means in terms of practical day-to-day trading, although I'm anticipating a stronger US dollar, it is possible that the Swiss franc could actually strengthen even faster, and therefore this could continue to slip and slide a little bit lower. So I'll keep that in mind, and so maybe looking for shorts, but even so it wouldn't go down that far, down to 0.9. And so generally speaking, I'd really like to see this climb, see that stronger dollar push through and get this climbing. And if it is the case, there might be some shorter term retrieve and seeing some opportunities to the upside. Dollar CAD. Dollar CAD. Again, this has been trending beautifully. It really has been. This has kind of produced some of the best trends in recent weeks. We've come down now to a key level of support, 1.3. We've had a good long run down without enough of a retracement. So even here on that weekly, nice little bullish candle, nice swing low here. I'd really like to see that head a little bit higher back in to test the recent lows, if nothing else, which means that it would head up towards 1.33, 1.34. And certainly that is a reasonable expectation. Here on the 4-hour, you can see that there's a nice little uptrend forming, high lows, high highs level here of daily support, producing a nice bullish candle. So shorter term moves to the upside make the most sense. All of these so far in varying degrees indicating a stronger US dollar. So that's my expectation, is to see the US dollar continue to strengthen for the next few days, and I'll be focusing on trends with at least the clearer trends supporting that idea, and being very cautious of ones where the other player in the currency pair is potentially strengthening faster than the US dollar, such as the Swissy pairs.